Hi friends, good morning. Welcome back to Karman Fin. This is SMC for everyone, day one, first session. So let's start. So before you start, please like this video and subscribe to our channel and share it with your friends. So basically, why do we need to trade or invest in stock markets? So basically like a passive income. If you see, if you invest money in FD, you'll get about like 7% or like nowadays it's only 5%. But in stock market, if you follow the risk reward ratio and follow the discipline and control, you can easily make around 10 to 20% annually very easily. And it can give you good returns than FD. And you're the boss, no one can control you. But you need the discipline and control or else you lose your all money. So that is why we are trying to invest in stock markets. And if you learn, you will be the boss. You know the risk reward and you know how to trade. But if you're trading on tips or for someone else calls, you won't have the confidence and you'll be making losses but no income. The tips do work, but you won't have self confidence. But if you learn, you will be the so first let's see what is a technical analysis. So basically technical analysis is used to find predict the movement of a stock, particular stock in a direction if it is going to go down or go up based on some parameters like the patterns, head and shoulders, triangle pattern, or based on the news. You might hear some stock has got an order, and you might see the next day stock moving, and there are like some patterns in the candles, like the doji candle, the hammer. That candles give you signs that the price is going up or down. So, or there are indicators like RSA, volume, EMA, etc. So, in the indicators, before you go, so how to use those all. So first let's learn about the candlestick. So if you go to the chart of Nifty, you'll see many candles. So basically we'll use tradingview.com. You can enter tradingview.com, then search for the stock. So I'll type Nifty. So anything that is tradable will be available on TradingView, and 99% of the people use TradingView. Even the broker which you use also use Trading. So once you go to TradingView, you search for the stock or the candle. So here we have something called the candlestick. It is like red in color. So generally there are different chart types. There are bar charts, which means there are bars for the up move and down, and there are candles. And there is line chart. Line chart is nothing you would have seen in TV that GDP is growing, GDP is falling. So basically it's the price movement. In the chart you have all the date range, that is like, so this is a daily chart. So there are dates like 19, 20, 21, 20. So if you go to weekly, there are weekly charts. Then you will have 12 months chart. So if you go to 12 months, you can see like every point is a 1 year. So if I go to candlesticks here, so every candle is 1 year range. So in 1 year, Nifty moved in how much way? If you see the historical data, Nifty was at 1000 in 1998, and from 1998, 20 years, Nifty is 23,200. So 1998. So then 2001, it is 2024. So Nifty has moved like 23 times up. So if in 20 years you would have made, so if you have invested 1000, in 25 years it would have become 23,000, which is like 20. So that is the power of stock market if you follow the rules and all. So let's see what is a candlestick. Okay. So there are two type of candles. One is the red candle. One is the green candle, which is bullish structure, which notates when the price is moving up. Suppose take here, each candle has like some components. That is a wick. So these lines are the wicks. Then the middle part is the body. Okay. So what happens? For example, we go to the chart. We take this candle on 24. The price opened at 23,173. If you place the candle on top here, you can see the open. O is open, high, H is high, L is low, C is the closing price. Okay. So on June 24th, if you mark on this candle, the opening is 23,179. So it is that it opened on the high, and from there the market fell till 21,284. So that is the low. So we formed a wick because price went here and again came back to 21,844. So it didn't close here. So body will be open and close only, and the other movement above or below the body will be the wick. So if you see here, so this candle. So the price went till 297 but closed in 996. This is a bearish candle. It went up again came back. So the line is there is no body. And when it closed at 2196 went down but came up. So that is the candlestick open. So when the price is opening and when the price closes below the open price, then it will be a red candle. That means if a candle opened at 100 and closed at 90, the price is the body which it fell. So in between, so if it is a daily chart on this day, if it will go to a low but close up high, there will be a lower wick. So if it went too high and it went higher than the open price but closed below this, then we'll have a top. Same for a bullish candle. When the price opens at a lower range and closes above it, that means price moved up. So it's showing a green candle. Here the price went down. So at 95 it opens, it closes at 100. So this is the wick because it might have gone to 107 and again came back to 100. Here it might have went to 90 but recovered, opened at 100, went to 90 and again recovered and went up. So then these wicks are formed. So these are the candlesticks. So what do the candlesticks do? So when you go to a chart, the candlesticks will tell you how the price is moving on that particular time. So mostly for trading, we use daily, weekly, and monthly charts. So we use slower time frames, but initially let's start with higher time. So let's select a stock. So let's see NLC India. So this is the monthly chart. That means 30 days of price movement is shown here. Okay. So then we'll have weekly. Weekly means for every week we have 5 days of trading. So in that 5 days, the price movement will be recorded in a single. So first, anybody must not try intraday or options. First, you should try with equity investment. Equity mostly we use weekly or daily charts for entry or exit. And we have 15 minutes, 30 minutes, 1 hour. These all can be used for intraday trading. Intraday trading is so in a single day. Suppose this 1 day candle is 4th June. If you see it's 2000. This is a big candle. So if I go to 1 hour, this candle will be this day's chart will be broken into hourly candles. Okay. So if you see here, this is first hour opening at 9:15. So market opens at 9:15 and closes at 3:30. And at 9 o'clock to 9:15 will be the pre-market where the auctions will occur for pre-opening. And after 3:30 to 3:45 we'll have the pre-closing, post-market. So these will be hourly candles. So even the hourly candle within 1 hour it will be the opening range. It will open here, it closed here, the wicks and all are. So intraday we won't use yet, but you can use the smaller time frame for intraday. So intraday means in a single day you have to open the order and close by 3:30. So that is intraday. But if you take a delivery or cash and carry, so once you buy the stock, it will be credited to your CDSL server and you will be assign the shares. So once you buy them, within 1 or 2 days, it will be credited to your demat account. So later, based on the improvement, you can sell it or buy it. So if you buy at the low, you will be selling it. If you buy at 190, you sold at 230. You got some profit, right? So you invested 10,000 here. So if you bought at 190 by investing 10,000, and there is a movement of 22%. So for 10,000, you have got 2,000 profit. That's how you earn in market. This 2,000 can be earned if you do the right entry. This movement was done in 1, 2, 3, 4, 5 days. Just 5 days, you got 20% returns. The FD gives you returns in 1 year. Also, it doesn't give you 20%. So if you follow the discipline and learn trade, you will easily earn money in stock markets. So this is about the candles. This is a chart how to trade for any stock. You can search it in the search bar, or if you go to your broker, you can search for the stock. Like I want Reliance. So if you search, you can have the buy and sell order options. You'll have the chart here as well if you click the terminal. So these are also integrated. So these are also the same charts. You'll see the volume and you have many tools. That is about charts. So a chart, in what the x-axis is the time frame and y-axis is the price range. Up move will be green, down move will be red. Anything that when we traded will have charts like gold, silver, or you have the bonds, government bonds. Everything has a price and it will move up and down. Based on the price, the charts will be formed. And there are candlesticks in each chart and there are different chart types. So if you go here, if you click this, you'll have multiple charts like Renko, Kanashi. So mostly we can use the line charts to mark the trend lines and all. And I mostly use candles. Some people might be using bars, but I prefer candlesticks. So once that is done, the next thing will be marking the swing high and swing low. So for any chart, so there will be a high and low swing. So how do we know which is the swing high, which is the swing low? Okay. So by definition, any candle whose low is not breached by the previous three candles, like 1, 2, 3, 1, 2, 3, and this 1, 2, 3. Previous three candles and next three candles must not breach the low. That is a perfect low. Same way for the high, the previous three candles and next three candles must not break it. So here 1, 2, 3 candles did not break this, and 1, 2, 3 candles did not break this. So that is a swing high and swing low. If you can open a chart, you can practice this. You can note these points. So you can mark the number of highs and lows. So this one is a swing high, this one is a swing low. So this one is a swing high, this one is a swing low. So that way you have many things. So this one is a swing low, and this can be a new swing high. So if you mark this, we'll know the range to trade for that particular day. So if I go to 15 minutes time frame, so generally we'll have liquidity at the day high, day low. Okay, so if I go 15 minutes, I can mark this high and low as the range. So price, when at this high, it will try to come down. When it is at this low, it will try to go up. Generally, we'll have setups like break off day low, short, break off, so break off day high, go long. So we have many such setups. So we have the day high fake outs, we have the day low fake outs. So generally, these are some of the important liquidity areas. So in a daily time frame or any time frame, if you mark the high and low for that particular range, we'll know that that can be a resistance zone or that can be liquidity zone, that can be a supply zone or that can be demand zone. So we'll know everything based on the highs and lows. So that is very important. You can practice, open a chart from trading view, any chart, just try to mark the highs and lows. So that's one exercise for you guys. So then we have support and resistance zones. So generally by definition, what is a support? So it's a price range where the price comes but does not go down and starts going up in the opposite direction. Suppose the price is moving down, it came here, it took support and it moved up. So that is the support zone. It came again, it took this support, again it went up. And resistance. The price was moving up, it came here, but due to this strong resistance. The support zone is where there is a lot of demand. People are liking to buy it at that price range. And resistance is there where a lot of supply. People are liking to sell it there. Same way, supply resistance is same, support and demand is same. Support has demand, resistance has supply. So what happens after multiple tries? Here if it comes 3 times or 4 times, the demand might have gone. So demand will go up. So the people who wanted to buy are all done. So there are no more people to buy. So it will go even lower to buy it. Same with resistance. It has tried 3 times. The supply would have dried up. So like 3 4 times, after 3 4 times, there is no more supply. The resistance will become weak and it will price will move up. So once the price breaks a resistance, it will become support again. Same way, when a support is broken, it will become resistance. Suppose this support is broken again. If the price comes down here and it goes, it will become resistance because there is no more demand here. It will become supply. So let's take an example. So if we take this range, the price tried to break so many times, but it did not. So it came so many times, it tested, and finally it broke here. So here it just did a fake out, it did not break out. So the price again took resistance so many times. What happened finally? It got broke, but still there is no clear upward move. It's still trading in this range only. So basically this can be a trend line support or trend line resistance. So what is happening? Price is trying to take support here. The price is trying to take resistance. This is the range. We are in this range for. So in this range, this is the resistance. This is the support. Price traded, and again it faked out. Again it faked out here. So there is no clear direction. So we'll go to a smaller time frame. Yes, we'll see. So this will give a clear idea. So if you see here, the price tried to break it several times. So this was facing a resistance. This is a resistance zone. And here it was taking support. This is a demand zone. What happened here? The price moved up, it broke this resistance and it came back and started going up. So what happened here? This resistance has now become support zone for this and it moves up. Okay. So same way, if you see here, let's take this range. So here the price was taking support, but what happened? Suddenly there was a gap down and it became resistance. See here, gap down, it touched here and it did not go up because now this zone has become the resistance zone. Earlier it was support. The price was trading up here. Now it has become a resistance zone. So anytime a support is broken, it will become resistance. Same way when a support is when a supply or resistance is broken, it will become support. Again, what happened here? So again, same resistance was broken. Now it turned into support. So that is how resistance and support zones occur. Generally, by definition, any range where the price does not go up and reverses in upward direction, then it is called supply or resistance. Any range where the price comes down and starts going up in the upward direction is called a demand zone or supply, demand or the support zone. So there are different types of patterns which people use for trading. We don't use any patterns in SMC trading apart from VC, volatile compression pattern, and cup and handle, which is also a type of compression. So all these patterns are formed due to compression. If you see here, the price is compressing in the range. Here also it is compressing in the range. Here also it is trading in a range. So basically all these work, but first there will be initial traps. We should know where to escape those traps. We should not blindly buy on breakout or retest. So we have to have other factors. So we never use patterns. Never use patterns. We use naked price action. What is naked price action? I'll just mark the demand zones, supply zones, and I'll be entering on that zone. So I know where to short, where to enter. So this is the demand zone. I'll wait for the price to come here and I'll trade for the longs. If I want to short, I know this is the supply zone. I'll short it here. I know the price will move there. So that is naked price action. So we don't need any indicators for this. There might be other factors influencing, but price is superior. It will already show you the news. So many people will be trading on the news, results, etc. So price will show you them. They are already factored in. So we don't need any indicators. So let's see how market actually works. So what is liquidity? Liquidity is nothing but the demand. FIIs, DIs need a huge order book, or they need huge orders to fill their requirement. So they'll need to find the zones where they'll have huge orders. Generally, where will they have huge orders? People who put FL at the support zone, people who put SL at the resistance stop when they are shorting, people who put SL when there is a breakout, they put the bottom of the range as SL, people who trade the trend line as support or resistance. So that is the places where there will be a lot of liquidity. So everybody will see that a stock is in upper circuit. There are a lot of buyers and sellers in the stock. The stock will move. So if you open now it's out of market time, but generally we'll have the auction here. We'll see that there are 90% buyers, 20% sellers, and all. So those are all bogus. Those are all fake orders placed to induce you into buying or selling, to make you induce fear and all. So we should never believe those. So based on supply or demand, only the price moves. For example, generally market is a zero sum game. Suppose if there are 100 orders, there should be 100 buyers and sellers on both sides. Otherwise, there won't be any executed order. If you see when the stock is in lower circuit, we'll have like 100% sellers, but there won't be any buyers. When a stock is upper circuit, they'll have 100% buyers, but they won't have any sellers. So based on demand supply, it will move, but there is nothing called high volume, low volume. There are more buyers, sellers. Always the buyers and sellers are equal. The volume is only the number of transactions. That is buyers plus sellers equally, and not the number of buyers or sellers. So let's take an example of IP. So why will the price move aggressively? Suppose you are bidding for Kohli. There are 10 teams who want to buy him. So as the competition increases, I'll pay 1 crore, the other player will pay 2 crores. It can go up to as long as there is aggression and demand. Okay. So at one time the demand will be expired. So I'll have a limited budget. So at 50 crores, I think they will close it and the price will be stopping at 50 crores. Same with the supply. So if there is an uncapped player, his base price will be 10 crore. 10 lakhs. When this base price is 10 lakhs, there won't be any buyers. They are not interested because he's uncapped. What will happen? Nobody will buy him. What eventually the price will go down, or it will be zero as they don't buy him. Same way, when a stock there is lot of supply because people are willing to sell, but there are no buyers, the price will move. So what will trigger the price movements? So if you see the market when you open some charts or when you open your brokers, you will see something like this. That there is a bid and ask. So these are the sellers, these are the buyers. I'll put a market order and I want like 1,000 orders. I want 1,000 quantity. What will happen? So I'll put a market order by 1,000. What will the price go? First it will exit 20 here, 60 here at 83. So still until here also my 1,000 quantity is not filled. Then here there is at 2.2 million at 14. So at last at 14 it will get filled. So all the price will move from 13.8 to 14. That is how the price will move. Same way I want to sell like 1 lakh quantity, but here only we have suppose 1000. So there is 50,000, 51,000 or something. I sell at a time 1000 quantity at market price. What will happen? Suddenly all these orders will trigger. Suppose there is 5 point. I say I said sell 10 lakh orders, 10 lakh quantity. What will happen? The price will suddenly fall to, as it will fill everything here. Still, I need more liquidity. Everything will fall and it will go to 400 or 13. So that way the price will either go up or down based on the execution of the, I mean, the aggression of the sellers or buyers. If I aggressively want to sell huge quantity, the price will automatically be moving down. I don't have the buyers at what price I want. So that is when. So when a panic move is created, what will the retailer do? He will just sell at market, sell at market. Everybody in panic will be selling. Once you are selling in panic, the price will be keeping moving down. Same way in FOMO you are buying. Everybody is eager to buy, and it will keep moving up because you won't put a limit on. You'll say buy at market. Out of the same way, the price will move up. That is what induces the market to move up or down. So that is when the institutional footprints come, we'll see the huge movement like 10%, 20%. That is how the price moves. And aggressive market orders will make the price up or down. Aggressiveness of the buyers will make it move up. Aggressiveness of the sellers will make it move down. So what is liquidity? So as I told you already, FIS, DIS need huge quantities to fill their orders. So they cannot fill them in 1 year as the price will move. So suppose the order for 100 crores market order, the price will move 100% for a stock with less float, right? So if your market cap is like only 100 crores, if I put a 100 crore order, it will like increase like 3x, 4x times in a single day. So what is the use for the seller? For the FIDI, if they enter the huge high pricing. So what will they do? They'll place order in the chunks. They'll create fake breakouts, fake breakdowns. They'll put orders at the highs and lows where there is a sell for every other guys. They will create the fake moves, then make you sell, and then they'll fill their orders. So never buy any stock based on news or any Twitter handles unless there is a research done. Most of them are doing genuinely, but there will be some fake Twitter handles and based on results because they are already factored into the price. So let's take a look at the Nifty chart. Let's see what are the liquidity zones. So generally, by definition, liquidity zones will be the trend line liquidity. That can be upper trend line or the lower trend line. There can be the cluster of highs. So this is one liquidity. So multiple highs or multiple lows here. You see there are multiple lows. So the highs, the lows, the trend line liquidity, and the zones where the patterns occur. So if you see, this is a W pattern. This is a W pattern breakout. Everybody will enter here, the retailers generally, right? And they'll put the SL on this trend line. They'll enter here, or they'll put SL on the breakout candle low. What happened? The next couple of days, that low is broken and their SL is hit. So here again, people would have traded on this candle pattern, some doji or inverted hammer or something, or the hanging man, 3 candles. Okay. Again, they have shorted here, and they would have carried their shorts for the few furthermore decline, right? They'll see this trend line breakdown. This trend line is broken. It has retested here. It will go even more down. They'll short more. They would have carried this long home. And over the weekend, we have the news that Modi is going to win. Exit poll results came. And next day, a huge gap up with 500 points. All this SL is gone. So, this trend line is a trap. This W is a trap. And this candlesticks pattern is a trap. This pattern is a trap. So, what happened here again? On this day, it's a hammer, which is a bullish candle. Again, there is a trap. Everybody would have bought candle here expecting 25,000. Modi is coming. Next day, what happened? The price tanked 1400 points Nifty. Everybody's whose SL is here. This SL is gone. These guys' SL is gone. Who got here? Everybody's SL is gone. These are like I think many people would have lost their life savings here who bought naked longs, calls, or something. Everybody's SL is gone. Who are placed a horizontal support. Suppose the demand zone. Right? So if they put SL here, that is gone. This trend line liquidity SL is gone. Somebody would have taken the entire range this low as SL. Even this is gone. Mostly people would have shorted here. Even then. This big red candle is there. Okay, Nifty has fallen 15,000 points. Twitter handles will give, news channels will say. So Nifty is going to 18,000. All this. This is a trend line breakdown. Trend line breakdown. Everybody will sell. They would have bought puts here. What happened next day? 800 points and recovery back to. So this is how they fill their liquidity. So these all orders they are filling their order to buy. They made a fake move to make them all afraid and they sell in panic and they entered at the lows where everybody exited with their SLs. So as a SMC trader, we should be sharp and we'll enter here before the masses and exit where everybody enters. That is the definition. SMC, we enter where everybody exits and we exit where everybody enters. So many people won't enter at these bottoms mostly because they will wait for the breakout. This is a range. They want the patterns. Take one more example. So this is the head and shoulders, right? So this is a head and shoulders M pattern. This head and shoulders is broken. So people would have shorted here as it is the shoulder. Shoulder it is shorted. But what happened? Price went up. Even if they'll short it the shoulder, they'll put the stop as SL. Their SL is taken. Okay? And price didn't go down. Again it went up. So everything is a trap. Mostly it is a trap. You should find the traps and trade on confirmation with other confidence. You should wait for the liquidity to be taken and all. So don't believe on news. Always price is factored into, the results are factored into, and even the. So if you want to see the results, I'll show you. So we have a stock. So let's see Inox Wind. So this stock has given bumper results. What happened on the result day? The results were out. Price gapped up. Okay, the price gapped up. So many people entered here on the breakout. Their SL is gone. And based on the news, whoever bought, their SL is gone. They are trapped here at the highs. And the trend line support is taken out. Their SL is gone. So basically, these are liquidities ranges because everybody puts enters here, put their SL in this range, on this support range, resistance range, right? So always news is factored in. For example, one more. This is I'll show you NLC India. So it was a very worst results. The price was trading. I recommended on that day. The price was trading at 220. So this was the demand zone. So price was trading there, and we opened. The price came down. And everybody would have shorted with the worst results. Maybe intraday they would have shorts. But what did the price do? It was here. So it was here. It gapped down here, and it recovered to 225 and didn't go down. Generally, what will people do? Okay, bad results. Let's short it. But what happened? The price didn't go anywhere. They would have made loss if they shorted at the bottom here. As this was a demand zone. Now the price was trading in a range. So never buy based on news or sell based on news. Never believe any news channel. In fact, in SMC we do, if it is a like stock which has like options, we do short that option for that stock. So that is liquidity for you guys. That is the basic intro for SMC. So in the next session, I'll introduce you to the different SMC concepts and all. Hope you like this. Please like the video and drop your comments below if you're feeling something I'm missing something or if my explanation is not good. This is my first video session or a recording. So please like, share and subscribe our channel. Share the video to your friends and keep following me for more such content. And our handle is at Karmanfin on Instagram and YouTube. Thank you. Have a good day. You can always comment your doubts in the comment section. Thank you.